Imagine this, it's the 25th of the month, your salary just hit your account. You open your banking app, you see the numbers, and for about 5 minutes, you feel rich. Then the bills come out, then you eat out to celebrate. Then you buy that thing you've been eyeing for. And before the month is even halfway done, the money is all gone. Sounds familiar? This is how most Malaysians handle their salary. The money comes in, it sits in one account, and you spend from the same account until it's empty. There's no system, there's no plan. You just hope there's something left by the end of the month, and most months, there isn't. But here's the thing, the problem isn't how much you earn. The problem is what happens in the first 24 hours after the money lands. Get those 24 hours right, and the whole month changes. Here's what exactly you should do. Step 1. When the salary hits, don't touch it. Not for at least 24 hours. I know that sounds weird. The money is right there, but here's why it matters. The moment you see a big number in your account, your brain goes into spending mode. Everything looks affordable. That dinner, you can afford it. That gadget, why not? That online sale, perfect timing. But if you let the money sit for just one day, the spending urge drops. You start thinking clearly. You realize you don't actually need half the stuff you were about to buy. The 24-hour gap is the cheapest financial tool you ever use. It costs nothing and saves you hundreds every month. Step 2. Before you pay a single bill, before you spend on anything, move that money to yourself first. Most people do it the other way around. They pay their rent, they pay their car, their phone bill, they buy stuff online, they buy food, and then save whatever's left. That's the problem. There's never anything left. So flip it. The moment you are ready to move your money, and that's 24 hours after payday, remember this. The very first transfer you make is to your own savings. Not your landlord, not your car loan, you, even if it's just 200 to 300 ringgit. Move that money first before anything else touches it. Now here's where most people messed up. They keep their savings in the same bank account as their spending money. That's a problem, because when you see one big number, your brain treats all of it as available money. You need to separate it, different account, different bank if possible. So you may ask, what's the best way to do this? Set up an auto transfer. On the 36th of every month, one day after payday, your bank automatically moves the money to your saving accounts. You don't have to remember, you don't have to decide. It just happens. And after 2 to 3 months, you won't even notice the money is gone. So the question is, how much should you move? Start with 10% of your take-home salary. If you take home 3,500 a month, that's 350 ringgit. If you can do 20%, even better. But even 10% is more than what most people save. Step 3. Now you pay your bills. Rent or mortgage, car loan, insurance, phone bill, internet utilities. These are the things that have to go out every month no matter what. You can't skip them. So get them out of the way fast. If you can, set all of these on auto debit too. The less you have to think about bills, the less mental energy you waste on them. The goal is to make the boring stuff invisible so you can focus on the stuff that actually matters. After savings and bills, what's left is your real spending money. Not your salary, not the big number you saw on payday. This smaller number, this is what you actually have for the month. Food, transport, going out, everything else. And once you know this number, everything gets easier. Because now you're not guessing, you're working with a real number. Step 4. If you have any high interest debt like credit card or personal loan, pay them off first. After your savings and bills are sorted, take whatever extra you can squeeze and throw it to the most expensive debt first. Think about it this way. Your savings account gives you maybe 2% of interest a year. Your credit card charges you 25% a year. Every ringgit you use to pay off that credit card is like earning a guaranteed 25% return on your money. There's no investment on earth that can beat that. Once that debt hits zero, the money that was going to the bank every month is now yours. You can move it to savings. You can start investing it. But as long as the debt exists, it's eating everything else you are trying to build. Step 5. Once the savings buffer is set, your bills are handled, and your expensive debt is gone, now your money can start working. This is where most people freeze up. They think investing is complicated. They think you need a lot of money. They think you need to understand charts and numbers and markets, but the fact is you don't. All you need to start is a simple investment account. Perhaps stash away Bursa through any local brokers and a small amount every month, even 200 to 300 ringgit. The point isn't to get rich overnight. The point is to get your money growing instead of sitting in a savings account losing value. Here's one thing people don't get. The money you invest at 25 has 35 years to grow before you're 60. The money you invest at 35 only has 25 years. That 10-year difference is huge. Starting small and starting now beats starting big and starting later. So here's the full system. Salary comes in, wait 24 hours, then move 10% to your savings before you do anything else. Then pay your bills and split what's left into 4 weeks. If you have expensive debt, attack it every month until it's gone. And once you are ready, start putting even a small amount into investment every month. This isn't about being good with money. It's about having a system so you don't have to be good with money. The system does the work. You just follow the steps. Every month, same thing. And after 6 months, you look at your savings and wonder why you didn't start earlier. If this helps you figure out what to do with your salary, share it with someone who needs a system. That's your Ringgit explained. See you in the next one.